I don't think there's one particular key. So I think the key, actually, let's start with what the bank's strategy is, because I think they've been quite clear that over the next couple of years, all being well, and I think you know what that means, rates are going to go up. Why are they going to go up? Because they're still at emergency levels, and I think more fundamentally there is a slow-moving inflation problem. Now, that's a very clear strategy. What about the tactics? Well, in year one, there were 2 rate rises. The best guess that in year 2, there will be 2 rate rises. Given that we've only just had the last one, given the news flow from since the last meeting, which has not been, I think, highly influential, I don't think the bank feels that they need to do anything at the moment.
Sorry, I thought you economists loved slow-moving inflation problem. I thought that was good. I thought slow-moving inflation in a northerly direction was exactly what you guys wanted, because it kind of inflates us out of our debt as well. Wages go up. It's part of a growing economy in many cases as well. I thought slowly upward-moving inflation was what your profession liked. Well,
there is an argument that inflation could be higher structurally, and we'd be better off. However, the Bank of England has an inflation target of 2%. And unless someone changes that, then that's how rates are going to be set. And we start off with inflation very slightly above the target. We start off with unemployment rate at 4%. We start off, and this is quite extraordinary, having an inflation problem if the economy grows more than 1%, which is the bank's views. So even though we have this very sluggish growth environment at the moment, the bank still perceives this to be in the medium-term inflationary.
It's quite an extraordinary number, isn't it? 1% is the
quite
level
depressing.
You need to have some inflation.
It's quite depressing.
I just want to get to the politics around a rate hike now, because by all intents and purposes, we look like we're at full employment. And under those sort of conditions, you would have a central bank potentially hiking. And the Fed's certainly been in that window where it's been trying to bank a few rate increases before the next crisis. Why would it be a disaster for the Bank of England to hike rates now, when we seem to be close to a Brexit deal? That's what all the reporting suggests. Why would it be bad to bank one now if we could step away from the politics of Brexit?
Well, I think the Brexit background, which potentially is destabilising in a feasible outcome, is a reason for doing nothing. But let's pretend that...
Even if there is a deal.
Yeah, so let's pretend that that's not there. So you raise the issue of full employment. As in the US, I think it's a very flexible concept. So the US has been at close to full employment with a strongly growing economy for some time, and inflation has crept up by a tiny amount. And I think one of the interesting things about the current environment is that we have these old-fashioned rules of thumb. Like if unemployment gets to a particular level, then inflation, wage growth will pick up. But if we look at the whole global economy, there's not much spare capacity in the global economy as a whole, and inflation is still very, very muted. And it seems to me that there's a case for thinking that there are some quite strong structural disinflationary forces which are still in play, which are making us, I think, question some of these old relationships.
I mean, can we investigate some of those structural relationships or new maybe labor markets? Is it things like the gig economy, which we love talking about, or the way that globalization has changed the labor force? What are your key thoughts on those disinflationary?
Well, one is pretty much every central bank has an inflation target, and it's really interesting. The way that markets price inflation is for inflation over the next 10, 20 years to be close to target. And one reason that I think that we have these very low inflation rates despite growth picking up is that inflation expectations just remain low because the markets think that for all the cyclicality, the central banks have got things under control. Now, that might turn out to be not correct, but I do think that's an important constraint. And I think the points you raise about labour markets are very important, that labour markets are changing in structural ways. I think it's much harder to get wage increases through, given the structure of labour markets in a lot of developed
just very
economies.
Briefly.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.